Hello and welcome to today's video. We'll explore how Russian sanctions have reshaped the economy and impacted the ruble. And the ruble is at the center of attention. Stay tuned to learn more. A brief overview of the sanctions. After the outbreak of the conflict in Ukraine in 2022, Western countries imposed extensive sanctions on Russia. These include restrictions in the banking sector, including the exclusion of Russian banks from SWIFT, export bans on critical technologies such as semiconductors and software, restrictions in the energy sector such as price caps on Russian oil and gas, sanctions on high-ranking officials, oligarchs and major Russian companies. These measures have had widespread effects on Russia's economy, targeting its ability to finance the war, limiting its access to critical imports, and isolating it from global financial markets. But what do these sanctions mean for the everyday Russian citizen and the broader economy? The ruble before the sanctions. Before the sanctions came into effect, the ruble was a relatively stable currency. Its performance was closely tied to global oil prices, as energy exports accounted for a significant portion of Russia's GDP. Russia had built up substantial foreign currency reserves, exceeding $600 billion, to buffer its economy against external shocks. The country enjoyed a trade surplus, exporting far more than it imported, particularly in the energy sector. However, despite this apparent stability, there were underlying vulnerabilities. Russia's heavy reliance on energy exports and limited diversification of its economy made it particularly susceptible to external pressures. The immediate effects of the sanctions. The imposition of sanctions in early 2022 triggered immediate and severe reactions in Russia's financial markets. The ruble plummeted in value, losing up to 40% of its worth within days. There was a rush on banks as citizens scrambled to withdraw their savings in foreign currencies, fearing further devaluation. Inflation soared as the cost of imported goods skyrocketed. To counteract these developments, the Russian central bank implemented drastic measures. Raising interest rates. The central bank hiked interest rates from 9.5% to 20%, aiming to stabilize the currency and curb inflation. Capital controls. Strict measures were introduced to prevent money from leaving the country, including limiting foreign currency transactions. Mandatory conversion of foreign earnings. Russian exporters were required to sell 80% of their foreign currency earnings to bolster the ruble. These actions provided a temporary lifeline for the ruble, but they also highlighted the fragility of Russia's economic system under the weight of sanctions. The current state of the ruble. While initial measures by the central bank helped stabilize the currency, the underlying economic conditions have deteriorated. Key issues include falling energy revenues. With price caps and reduced global demand for Russian oil and gas, the country's primary source of foreign currency has diminished. Import challenges. Sanctions on critical goods, such as machinery and technology, have forced Russia to turn to less reliable trading partners, often at higher costs. Inflation and economic stagnation. Domestic prices for food and essential goods have risen sharply, while wages have stagnated, reducing the purchasing power of ordinary Russians. Limited foreign investment. With Western investors pulling out and limited access to global markets, Russia's economic growth prospects remain bleak. These factors have contributed to the ruble's ongoing weakness and the overall economic strain on the country. What does the future hold for the ruble? Looking ahead, the ruble's future will depend on several key factors: economic resilience and adaptation, Russia's ability to develop domestic industries and reduce its reliance on imports could alleviate some of the pressure on the ruble. Geopolitical developments. Any potential resolution to the conflict in Ukraine or easing of sanctions would likely lead to a rebound in the ruble's value. However, this scenario seems unlikely in the near term. Alternative trade partnerships. Deepening ties with countries like China, India, and Turkey could help offset the loss of Western markets. For example, Russia has increasingly turned to the Chinese yuan for trade settlements, reducing its dependence on the US dollar and euro. Global energy market dynamics. A recovery in global energy prices or increased demand for Russian energy could provide much-needed foreign currency inflows. Ultimately, the ruble's trajectory will be shaped by the interplay of these factors. While Russia's government continues to project confidence, the economic reality suggests a long road to recovery. The human impact of economic struggles. Beyond the macroeconomic figures, it's important to consider how these developments affect everyday Russians. Rising prices. The cost of basic goods, from bread to fuel, has increased significantly, putting a strain on household budgets. Job losses. Many industries, particularly those reliant on imported components, have scaled back operations or shut down entirely. Growing inequality. While some elites benefit from alternative trade routes and black market activities, the average citizen bears the brunt of the economic hardships. These struggles paint a stark picture of how sanctions and economic instability ripple through society, highlighting the human cost of geopolitical conflicts. What are your thoughts on the ruble's development? Do you think Russia can overcome these challenges, or is the ruble doomed to decline further? Share your opinions and thoughts in the comments. If you enjoyed the video, give it a thumbs up and subscribe to the channel for more in-depth analyses. See you next time.